where we bring trading experts to you live in the platform. Choose sessions, watch live market analysis, and catch up on your favorite market insights anytime. Ask questions and go one-to-one with leading experts on gold, oil, FX, crypto, indices, and equities. X-Ray, your very own analysis team, right at your fingertips. That's higher trading from MarketsX. Discover how some of the top executives are trading their own companies with our Insider Trades tool. See who's been buying or selling stock and what their trades say about insider sentiment. Use this unique big data tool to make more informed stock trades. That's higher trading from MarketsX.
Good day, good morning, good afternoon, everyone, and welcome to the Jobs Report Day with InstructFX. My name is Andrew, and today I'm bringing you the latest news from the markets before the opening bell. So buckle up, hit that subscribe button, and let's get started. Before we get started, though, I want to rest assure you that anything you hear and see during this talk show does not represent investment advice nor a solicitation to buy or sell contracts for difference or cryptocurrencies. Financial instruments are complex products that carry high risk, so you better do your own analysis before making any investment decision. Here's what's happening in the markets today, Friday 6th, 2021. 6th of August. The US dollar index traded higher today on the European trading session ahead of the jobs report data due to come out in 30 minutes from now, and analysts are expecting the jobs report to show an increase of 870,000 jobs for the month of July. A number that size or larger could lift the US dollar further, especially against the euro and the Japanese yen. The expectations for a strong jobs report this month grew yesterday after initial jobless claims data for state employment benefits fell by 14,000 to 385,000 jobs in the week ended July 31st, and layoffs also dropped to their lowest in more than 21 years. However, the strength of the US dollar might only be temporary, Vasileios Giannakis, global head of FX strategy at Lombard Odier Group, stated earlier today. On the whole, I still think we're in the phase of, in the business cycle where growth and global trade are going to remain relatively solid, and that's going to provide some downside bias for the US dollar. Giannakis stated today, and his view seems to be getting some support from a Reuters poll of strategists that also predict a downturn for the US dollar next year. Let's see what's happening in the currency markets. We see the euro tanking even further against the US dollar today as a positive outcome for the jobs data seems almost inevitable, and with the German industrial production slowing down to a negative 1.3% versus an expectation of 0.5% on the positive side, probably contributed to investors' decision of shorting the euro ahead of the jobs report data today. Let's have a quick look at the pound. We see the pound also trading to the downside against the US dollar, getting a rejection from the resistance level at 139.34 and potentially heading to the 138.85 to the downside, or even lower if the data on the US dollar comes out satisfactory. In the commodities markets, we see gold futures falling below the $1,800 level once again, apparently heading towards that support level at 1792, with the next spot to the downside around the 1770 mark. Overall, the range for gold futures remains pretty wide, with gold price stuck between 1790 and 1834 since the beginning of July. Crude oil WTI gained today on the European trading session, but remains on track for its biggest weekly decline since March, as travel restrictions on the virus spread and the increased quota for the OPEC Plus members are raising concerns about global fuel demand. In the cryptocurrency markets, we're looking at Bitcoin trading steady at $40,600 after topping up to $41,000 last night for a very short time. And Ethereum also seems steady, trading around $2,750 after it gained around $250 yesterday after the long speculated London hard fork. More about this topic and the NFP jobs report live coming up. Good day, good morning, good afternoon, everyone. Once again, and happy Friday, beautiful people. We are less than 30 minutes away from the jobs report, and economists are expecting the jobs report to show an increase of 870,000 jobs for the month of July. As I was saying a minute ago, a number that size or bigger could lift the US dollar further, especially against the euro and the Japanese yen. Let's have a quick look at the charts and see how the most traded assets traded today on the European trading session. Then we're going to have some cryptocurrencies news. And of course, the Q&A is open starting now. So ask me anything you want to know about trading, about investments, and I will do my best to answer all your questions today. So in the economic calendar so far, in 19 minutes from now, we're going to have the non-farm payrolls being announced, along with the average hourly earnings month over month and year over year, along with the unemployment rate. Yeah, and we're going to see the unemployment rate coming out on the Canadian dollar as well. So the USD CAD pair is under pressure as of now. The average hourly earnings are expected to come out at 3.8%, which is an increase of 2 basis points from the previous 3.6% year over year for the month of July. We're looking at month over month, an increase in average hourly earnings up to 0.3% is expected, versus the previous 0.3%. And the non-farm payrolls are expected to come out at 870,000 jobs versus the previous at 850,000 jobs. Private non-farm payrolls are also expected to come out high at 700,000 jobs versus a previous of 662,000. Yeah, and the unemployment rate is also expected to drop by 2 basis points from 5.9% to 5.7% in the US. In Canada, analysts are also expecting a drop in unemployment numbers to 7.4% from the previous 7.8%, which is a drop of about 4 basis points. Let's see what's going to happen. Meanwhile, let's have a quick look at the most traded assets and see how the markets performed today on this beautiful Friday, 6th of August, 2021. We're looking at crude oil WTI futures gaining on the European trading session and currently trading at $69.81, only 18 minutes ahead of the non-farm payroll data coming out from the US. With the RSI and the stochastic up in the overbought level, so we might see a bit of a correction happening for crude oil WTI. Meanwhile, we're looking at the euro trading versus the US dollar at 118.08, marking some sharp drops on the European trading session today, again with technical indicators towards the bottom of the chart, indicating a lot of selling in the markets. The pound also traded to the downside for some time on the European trading session today, gaining a bit in the last couple of hours, trading a bit higher at 139.18 with RSI somewhere in between overbought and oversold levels and stochastic at the bottom of the chart pointing to the upside, but still very, very shy ahead of the non-farm payroll data coming out in less than 20 minutes from now. If the pound will break higher, probably we're going to see a retest of that resistance level at 139.39. And if it's going to break lower, probably you're going to see a retest at 138.87. This is for today. Let's see what's going to happen. USD JPY gained a bit after opening the day to the downside, currently trading at 109.79, a bit closer to that 110 level that we got so used to in the last couple of weeks. Here we see RSI stochastic not moving very much. There's nothing much happening on the markets ahead of the announcement. The volatility will kick in a few minutes before the announcement, so we're going to see some movement. But for now, this is it. The Aussie dollar almost froze on the European trading session today, currently trading at 0.7395. 15 minutes ahead of the non-farm payroll data coming out. Let's see what's going to happen. RSI somewhere in between at exactly 50%, stochastic at 44%. So basically, there's not a lot going on in the markets. USD CAD traded to the downside in the last couple of hours after marking very little gains on the European trading session. 125.03 seems to be the exchange rate as we speak. We might see the US dollar pointing to the downside once the announcement comes out. Let's not forget that we have the average hourly earnings and we have the unemployment rate from Canada being announced in the same time with non-farm payroll data. So there is a lot of pressure on the USD CAD. So far, we see the RSI pointing downwards, and we see stochastic turning around from its overbought levels again, pointing downwards. So the USD CAD pair might retest that 124.37. Yeah, if the announcement comes out positive for the Canadian dollar. Quick look at the S&P 500 and the Dow Jones, which the S&P 500 managed to close the day at record highs once again yesterday at 4,429.10 after struggling for quite some time to break higher from that triple top that we see at in the higher section of the charts. The Dow Jones Industrial Average closed the day lower, though. 35,064.25 was the price at closing yesterday for the Dow Jones Industrial Average. Let's see what's going to happen today. We saw very little movement pre-markets open today. Okay, not a lot of activity, not a lot of buying or selling is happening ahead of this huge NFP data that's expected to come out in a few minutes at an astonishing 870,000 jobs for July. The US dollar index, which seems to be having a bit of an issue on investing.com's charts, traded to the downside on the European trading session today. So I'm going to move to gold futures, which currently trading at 1,802.35. Ahead of the announcement. We saw a movement to the downside on the Asian trading session. This movement continued on the European trading session, on the back of a stronger US dollar. And in the last hour or so, we see gold futures picking up a bit and trading a bit higher at $1,802.35 an ounce. Let's see what's going to happen. Very interesting. If we're going to see a break to the upside, then we're going to see that 1,811.64 level tested once again. And it's very important what follows after. If gold will trade to the downside, then probably traders will eye that 1,792.95 to the downside. And if that level will be broken, then probably we're going to aim even lower at 1,772.51 for gold futures. We see gold stuck in a wide range since the beginning of July, guys, since the 6th of July, when gold futures managed to get back to 1,794, once again. Right, we are exactly 15 minutes ahead of the opening bell. Let's move on. Let's see if the dollar index chart recovered on investing.com's website. No, apparently not. Let's move on. Let's have a quick look at Bitcoin and see how Bitcoin traded in the last 12 hours or so. Gains for Bitcoin yesterday. Very good gains for Bitcoin. We saw a push from that $38,000 mark all the way up to 41,353 last night. And since then, we saw Bitcoin pulling back a bit and currently trading at $41,043 once again. So for the ones of you that were betting on Bitcoin's weakness after the Security and Exchange Commission gave it a beating, basically, with Gary Gensler asking for more control over cryptocurrencies. The head of the Security and Exchange Commission a few days ago to tackle basically money laundering and terrorist activities. $41,043 for Bitcoin and Ethereum, guys, after the London hard fork did not move as much. We're looking at Ethereum trading a bit higher today, $2,785.92. Okay, after the London hard fork happened. Now, I was telling you I have some news from the cryptocurrency markets. So bear with me for exactly 30 seconds, beautiful people, and I'm going to give you the news. It's very big what's happening. We saw a very aggressive article in regards to the Federal Reserve, basically, and I'm going to share all the details with you in just 30 seconds. Stay tuned.
Keep your finger on the market pulse with the News Alerts tool. Stay up to date on the latest sentiment across all the major asset classes. Uncover bullish or bearish signals tied to specific assets that could be developing before major price moves, and track how news sentiment correlated with price in the past. Track the news volume on an asset, its fear index, and get a better feel for its underlying strength. All with News Alerts, your central hub for market information. That's higher trading from MarketsX.
Right, I was telling you I have some crypto news, guys, that scared me a bit this morning, and I want to talk about it today because it's very, very important what's happening. So basically, the Security and Exchange Commission's press conference this week, where Gary Gensler, the Security and Exchange Commission chief, asked for more control over cryptocurrencies, sparked some controversy on the World Wide Web. One article that got my attention today is this one, where Helen Boyniski almost literally picks Gary Gensler by his white collar. Check this out. The U.S. Security and Exchange Commission has demanded more authority over trading, lending, and selling cryptocurrency, unable in its jealous rage to grasp that crypto exists because it's a safe haven from a venal banking system, Helen Boyniski stated. The Security and Exchange Chairman Gary Gensler cited investor protection as the reason the commission should have a white book to take the crypto out of cryptocurrency in a speech to fellow finance bigwigs on Tuesday, describing the sector as like the Wild West, as he urged Congress to rein it in. Now, I'm very curious about your opinion on this one. Is the cryptocurrency spectrum the Wild West nowadays, or it isn't? Let me know what you think in the comments box below, guys, and let's have a chat regarding this article. Gary Gensler, former Goldman Sachs partner and late advisor to the U.S. Treasury, either knows nothing about the industry in which he has worked for most of his life, or is more likely playing dumb. Once again, Helen Boyniski stated in her article. If anything, it's the Wild West casino capitalism of investment banking that has wrecked the U.S. economy repeatedly and seems poised to do so again. Cryptocurrencies throw a wrench into that machine by allowing Americans to stash their assets outside the rigged financial system in a way that's more probable than gold or other traditional hedges, and the old system has nothing to offer the customer to lure them back. Clearly, cryptos have to go. After all, it's not like the U.S. Central Bank or its financial regulators like the Security and Exchange Commission have done a great or even satisfactory job when it comes to running a functional system. This is what Helen Boyniski, an American journalist and political commentator at ART, wrote in an article. Now, obviously, I do have to comment on this article because she's basically tearing apart the Security and Exchange Commission and the U.S. economy. Dear Helen and people that think the same as Helen Boyniski, here are two headlines released recently. Bloomberg reported that crypto scammers rip off billions as pump and dump schemes go digital, and by the looks of things, this will only get worse. And the second article that got my attention, dear Helen and dear conspiracy theory people, is this one. Crypto and investment scams skyrocket in 2020, and 2021 seems to be looking a lot worse. 2020 was a record year for investment and cryptocurrency scams. Almost 26,500 cases were reported to the government, and those cases resulted in a loss of 419 million US dollars. 2021 is on the pace to exceed those numbers so far. Yeah, $419 million were stolen when people got scammed in cryptocurrencies, dear Helen. The Motley Fool wanted to dig deeper into the rise of investment and cryptocurrency scams to understand how they happen, who they target, and how investors can better avoid them. And check this out. This is where it gets very interesting, beautiful people. To that end, we surveyed American adults who had been targeted by an investment or cryptocurrency scam and dug into data gathered by the Federal Trade Commission, or the FTC. They found that the use of cryptocurrency and social media by scammers has skyrocketed, and many people don't report them when they're targeted by a scam. And almost 75% of people targeted by fraud or scam are less likely to invest in the future. 2021 will be a record year. Yeah, looking at the key findings of this amazing article distributed by the Motley Fool. 2021 will be a record year for investment fraud. 14,079 investment scams were reported to the Financial Trading Commission in the first quarter of 2021, and victims lost so far $215 million in this quarter alone. Reports, the percentage of reports that reported a loss, median losses and total losses are on pace to exceed those reported in 2020, which significantly surpassed 2019 numbers. Scams are also going unreported, dear Helen, and dear people that think that the world economy should go and cryptocurrencies should be the new world economy. Just 62% of those targeted by an investment or cryptocurrency scam filed a report with the government, studies show. Of those that didn't file a report, 37% said they didn't know they could. So the people are misinformed, guys. They have no idea about what's going on. So with this being said, with what many people don't seem to understand is that the world economy and the world trade is still made in US dollars, guys. The fiat currencies, the paper money did not disappear yet. And if everyone will avoid paying taxes, we will see the world economic system crashing, and all those cryptocurrencies that we love so much will be absolutely worthless. Another thing that's worth noting is that cryptocurrencies are the newest asset class, the most expensive one and the most volatile one out of them all. And unexperienced people could lose their life savings and are losing their life savings if they invest in assets they don't know or if they get scammed. While the standard asset classes such as Forex, commodities, and stocks are somehow kept under control and regulated, in the cryptocurrencies markets, there is no such thing, and the market manipulation sometimes exceeds any logic. Let's try and remember. Let's try and remember what happened to the price of Bitcoin, to the price of cryptocurrencies, when one or another very rich people post anything on social media. And the question is this: what would happen to your investment if you're caught on the wrong side of the trade? After such an announcement. Okay, it exceeds any logic. Okay, right. We're 7 minutes ahead of the non-farm payroll data, guys. Right. Moreover, on this topic, over half of the people that invest in cryptocurrencies have absolutely no knowledge or understanding on how this works and end up being scammed from day one without having a fair chance to the markets. And this happens in the CFDs world as well. So if all these people lose their fiat money, their paper money, their US dollars, in heavily manipulated market and only the rich or the scammers benefit from it, how do you see the world economy looking in the next 5 years? How do you see the world economy looking in the next 7 years or in the next 10 years? Beautiful people. This is what I want to know. And Helen, if you can answer to this question, it would be much, much appreciated. This is what I have to say, beautiful people. Let me know what you think in the comments box below. And please open your eyes wide when it comes to investing online or investing in cryptocurrencies. Now, let's take a 30-second break, and then we're going to come back with more news. Stay tuned.
Discover how some of the top executives are trading their own companies with our Insider Trades tool. See who's been buying or selling stock and what their trades say about insider sentiment. Use this unique big data tool to make more informed stock trades. That's higher trading from MarketsX.
Right, and we're back, beautiful people. Only 4.5 minutes remaining from now to the NFP data, which will come out in a few minutes. Let's have a look at the very interesting article about the US dollar against its other peers for a few minutes, and then we're going to witness the NFP data live. So the headline today was that the dollar is at 1 week highs as job test looms. Right, going through this article, the dollar crept higher on Friday, lifted by a rise in U.S. inflation adjusted bond yields to 1 week highs, and expectations of a strong set of employment data could make the case for faster U.S. policy tightening. Federal Reserve Vice Chairman Richard Clarida laid the groundwork for dollar gains by suggesting this week that conditions for hiking interest rates might be met as soon as late 2022. Clarida's remarks lifted Treasury yields after 5 weeks of declines, while real yields, excluding inflation, are set to snap a 6-week streak of declines. U.S. non-farm payrolls are due to come out in a few minutes from now. Forecasts for jobs created last month vary widely from 350,000 to 1.6 million jobs, but closer to reality, the consensus figure, or the whisper number, is at 870,000 jobs for the month of July. Now, we had some reactions about this number. We saw Steve Englander, global head of FX research at Standard Chartered, said that even a figure close to the current consensus could provoke a market reaction. A major piece of data that can be read as an optimistic signal could firm up rate expectations, he said, particularly as markets have recently backed away from pricing in hikes. We saw the dollar trading at 1 week high at around 92.39 against a basket of currencies today, having eked out a 0.3% gain so far this week, following last week's 0.9% fall, which was its worst since May. Right, we're getting very close to the jobs report, guys. Again, the US dollar index doesn't want to work on investing.com's charts. We see the volatility picking up, with gold futures trading lower at $1,793.40, only minutes ahead of the jobs report coming out. We see the USD CAD pair trading to the upside and apparently testing that high at 125.41. Yeah, 125.25 current market price. I'm going to try and zoom out a bit so you get a better view of what's going to happen when the numbers come out. We're looking at USD JPY pushing to the upside again, and trading at 110.01 as we speak, again with the RSI pointing upwards towards the overbought levels, and stochastic pointing upwards as well. Okay, the euro versus the US dollar traded to the downside the entire day. We saw it retracting minutes ahead of the jobs report data. 117.97 for the euro versus the US dollar today. Right, we should be 2 minutes ahead of the announcement. I'm gonna decrease the time frame to a 15-minute or a 5-minute chart just before the announcement, so everyone can see the volatility that happens around this time. 118.07 flat for the euro, 2 minutes ahead of the announcement. We're looking at the pound trading at 139.17. USD JPY, wow, big spike for USD JPY, 109.98 as we speak. USD CAD, again a spike for the USD CAD, 125.22, and the Aussie dollar spike to the downside. Okay, currently trading at 0.7387. Gold also spiked to the downside, which makes me think the non-farm payroll data came out, and we are looking at astonishing 4% for the average hourly earnings versus an expectation of 3.8%. 0.4% versus an expectation of 0.3% for average hourly earnings for July. Non-farm payrolls coming out at 943,000 jobs versus an expectation of 870,000. Participation rate 61.7%. Private non-farm payrolls 703,000 versus an expectation of 700,000. Unemployment rate surprisingly 5.4% versus an expectation of 5.7% in the US. We see an unemployment rate on the Canadian dollar coming out higher than predicted by analysts at 7.5% versus an expectation of 7.4%. Big gains for the US dollar are expected today. Again, there we go. The US dollar index seems to be working. We saw a spike on the US dollar index all the way up to 92.588. And currently we're looking at the US dollar index trading at 92.502. Right, hold your horses, beautiful people. We're gonna see some movement happening. The number is very close to the 1 million jobs created in July in the United States. We see gold trading sharply to the downside, 1,791.55. Big spike for gold to the downside. Let's see if it went below that support level that I drew a minute ago. Yes, it went below 1,791.20. Let's see what's going to happen if the US dollar will continue to move to the upside. Very likely today we're going to see gold futures retesting the lows at 1,772 and 83. Wow. Right, let's see if that had any impact on silver futures. Again, silver trading to the downside just like gold, 24,900 for silver futures. Let's see if it had any impact on the Bitcoin. No, nothing. No impact on the Bitcoin. So far, we see a bit of buying happening on Bitcoin 10 minutes ago, but no solid impact so far. Ethereum, again, trading at $2,780.23. After gaining in the last 10-15 minutes or so, we see a red candlestick opening. Let's see what's going to happen from now on. Right, astonishing numbers, guys. Astonishing numbers. Everything came out in green for the US dollar. Average hourly earnings 4%. Average hourly earnings for the month of July 0.4%. Non-farm payrolls once again 943,000 jobs announced for July versus an expectation of 870. Private non-farm payrolls rose by 3,000 versus the expectation, 703,000. Unemployment rate, 5.4% versus 5.7% predicted by consensus. Amazing numbers, guys. Amazing numbers, and it came out all green for the US dollar. So the US dollar should strengthen sharply, considering that the average hourly earnings and also the unemployment rate came out way better than what consensus has predicted. I see you're very shy today, guys. You don't have a lot of questions for me. It seems that you know what you're doing. In case you have any questions, feel free to type your questions now as we're going to end the broadcast in a few minutes, and I'm going to let you enjoy the weekend. Yeah, the amazing weekend, the torrid weekend that is announced ahead. Right, we see a pullback so far on the US dollar index 92,487. Yeah, it's pulling back. The movement is not as many of us were expecting, but let's see what's going to happen at the US markets open. Yeah, which is going to be in exactly 1 hour from now. Probably the orders are accumulating as we speak. Yeah, the buy or the sell orders on the markets, and as soon as the US markets will open today, we're going to get a better direction, a better direction for the US dollar. I'm so excited about the numbers, guys. I cannot find my words today. Right, one last news I want to share with you. The long-awaited London hard fork has happened yesterday, and the movement in Ethereum was not as people were expecting. We didn't see Ethereum spiking all the way up to $5,000, and we didn't see Ethereum spiking all the way down to 1,700 as an anonymous specialist reported yesterday. Let's have a quick look at this article, a quick read through, and see what protocols were actually implemented with this Ethereum London hard fork. And what these protocols could bring to Ethereum. Right, so we see that at 12:34 UTC at block number 12,965,000, Ethereum's latest hard fork upgrade called the London hard fork officially activated on the network. The latest backward incompatible hard fork also marked the rollout of 5 new Ethereum improvement proposals. The EIP 1559, 3554, 3529, 3198, and the protocol 3541, which are code upgrades that aim to improve the Ethereum network's user experience, value proposition, and more. It is fair to say that the London hard fork has received more media attention than previous upgrades. The growth of crypto markets this year has helped bring Ethereum to the forefront for the news, and investors are interested in the potential effect that the new EIPs could have on the network as a whole. And this is where it gets very, very interesting. Briefly, we're going to touch upon the EIP 1559. which basically replaces Ethereum's auction-style fee market with an algorithm that automatically sets the gas price. According to a report from Kim, there are 4 significant proposals for the proposal, including counterbalancing Ether's increasing supply, preventing economic abstraction of Ether, which was up 5.9% today, reducing fee volatility and increasing fee market efficiency. All stakeholders of the Ethereum network will be affected by the EIP 1559 to some degree. Users of the network will now have to have a new fee market that will change how their transactions are prioritized and will add predictability to transaction fees. Another headline that I saw today was that basically since yesterday, Ethereum is burning $10,000 worth of Ethereum per day, okay, which again is very, very interesting. Now, moving on, the EIP 1559 will also introduce greater block size variance, meaning block size can fluctuate up to 2 times the current maximum limit during times of high network congestion. When it comes to the amount of transaction data able to fit in a block, this flexibility is intended to improve fee market efficiency and help alleviate some of the pain points caused by Ethereum's limited transaction throughput, or how fast the network can process the transactions. Well, perhaps the most widely debated change was the EIP 1559 is that the EIP 1559 implement is one that affects miner rewards, and we might see miners getting a bit upset, basically. With the upgrade, miners will receive reduced transaction fees and become more reliant on block rewards, transaction tips, and potentially maximal extractable value for rewards. Finally, long-term investors will see an update to Ether's emission schedule and enforcement of Ether's use case as a form of payment for block space. Right, but we have other protocols that were implemented as well. The EIP 3554 delays the difficulty bump that is coded to make mining more difficult, essentially freezing it in preparation for Ethereum's transition away from the proof-of-work model. Also called the Ice Age, the difficulty bomb is intended to disincentivize miners from using proof of work once Ethereum 2.0 is ready by making block rewards much harder to come by. Yeah, the EIP 3354 pushes the Ice Age block to December 1st, hinting that the merge with Ethereum 2.0 may happen at the end of this year. This is the 4th time that the difficulty bomb has been delayed, and unless the network is finally ready to move to proof of stake by the end of the year, it's likely to be delayed once again in yet another network upgrade. The other protocol that was implemented is the EIP 3529, which basically reduces gas refunds, which were typically used to incentivize developers to reduce or delete unused smart contracts and addresses on Ethereum. However, gas tokens like Chi and GST2 gained the system by taking up space on the network when gas fees were low and reaping the benefits by deleting their data when gas fees were high. With the implementation of EIP 3529, these tokens will become obsolete. The EIP 3198 allows users to return the base fee opcode, which makes it easier for developers to call and use any given block space fee for decentralized application estimations and efficiency. And finally, the EIP 3541 sets up future upgrades to the Ethereum virtual machine by removing the ability to start new contracts with OXEF or executable format. Although it won't have an immediate effect on the network, it sets up future changes and restricts the Ethereum virtual machine from consuming specific data types. Okay, this is basically what's happening, and this is what happened with the London hard fork upgrade. The movements on the markets were nowhere near where we thought they would be. Yeah, the crypto traders, but let's see, it's only 24 hours after the protocol, so things will start making sense from Monday onwards. Meanwhile, quick look at the charts before I let you go, guys. We're looking at the US dollar index futures retracting after that volatility spike that happened at the announcement. Quick look at the economic calendar. Once again, we see non-farm payrolls coming out at 943,000 jobs for the month of July. We're looking at average hourly earnings rising, which basically means Americans are being paid more per hour. Yeah, and we see the unemployment rate in the U.S. Dropping to 5.4% from the 5.7% that was expected by consensus. Big moves on the U.S. dollar against its peers are expected to happen after the opening bell, which will be in 45 minutes from now. I see you're very shy today. You didn't want to talk to me. It's okay. We're barely getting to know each other. But hopefully from Monday, you will be more and more excited about the markets and you will have more questions. This is it from my side today, guys. Thank you for joining us today at the non-farm payroll data, which again took everyone by surprise, giving the US dollar a bit of a boost. This is it from my side today. Join me again tomorrow, on Monday, for a new round of market talks. And until then, remember to trade responsibly and may all your trades be in the money. Have a nice weekend, everyone, and I'll see you early on Monday. This video was sponsored by Markets.com.
Discover how some of the top executives are trading their own companies with our Insider Trades tool. See who's been buying or selling stock and what their trades say about insider sentiment. Use this unique big data tool to make more informed stock trades. That's higher trading from MarketsX.